Hello, this is Matt on the Moon Family Sedan channel. Crypto markets dramatically plummeted yesterday after the Fed announced that they were increasing the federal funds rate by 25 basis points. It's like the sky is falling out of this all of a sudden. Completely ridiculous behavior, but it's fun to observe and not participate. XRP went down along with everything else, got as low as the 41-cent region, and it's recovered since then. And frankly, what's most probable at this point from the analysts that I follow is a continuation to the upside. Now, outside of news regarding the SEC v. Ripple case that's positive doesn't mean that you're going to have a melt your face off type of rally, tomorrow, but still a trend to the upside. But if we do get positive news sooner than later regarding the SEC v. Ripple case, that's certainly on the table. So it's a good time to be holding XRP, in my humble opinion. We also saw as a result of a lot of the nonsense behavior trading that occurred yesterday, massive liquidations. Look at this headline from the Daily Hodl. $359 million in Bitcoin and crypto liquidated in just 24 hours as Bitcoin reclaims $28,000. Then there was also this headline from the Daily Hodl. ARK Invest's Cathie Wood says institutions will come for Bitcoin amid U.S. banking crisis. Now, that's an interesting concept. Now, I still believe, as far as institutions and long-term, are they going to get in a much more notable capacity? I think the obvious answer must be yes. It's not like crypto is going away despite the onslaught that we're facing here in the United States from a regulatory perspective. But the question is, what's the pace going to look like, and what does that mean for the typical retail investor? And then also at the end of the video, I do want to talk about one thing. I'm just probably going to spend maybe 2 or 3 minutes on it. But like 2 days ago, I made one of the largest cryptocurrency purchases that I've made in my entire life, and probably the most risky one I've ever made, and it happens to be one of the biggest. So maybe I become a sad panda if this doesn't go very well, but I want exposure to the crypto asset class, and I think there's opportunity here. I think there's tremendous risk. So I'll tell you what it's all about towards the end part of this video, but I do want to be clear, I am not encouraging anyone to do what I did. I just think it's fun to talk about this stuff, so I'm going to share with you what I did. Maybe it'll prove to be a brilliant move. Maybe in the future, I know you can play this clip back to me. I'll be like, wow, I was a total idiot stick. We'll see. We'll see what happens. But that's the thing. When it comes to crypto, I do think most coins will ultimately fade away and basically go to zero. And we don't know which ones. And so for me, it's somewhat easy to justify just in terms of exposure. I want exposure to the asset class. The question is, did I perhaps go too far in what I actually spent? But before going further, I do want to be clear. I do not have a financial background of any kind. I am not offering financial advice. And you definitely should not buy or sell anything because of anything I say are right. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, as I record this video, XRP's at 44 cents, but it did hit a 24-hour high after dropping to 41 cents, hit a 24-hour high of about 45.5 cents. Here's a 24-hour chart on your screen. Don't mind seeing that. Bitcoin at the time I'm recording this, $28,228. Chart doesn't look that different. It kind of had a pump a little bit later in the day than XRP, as you can easily see visually, but got as high as $28,692. So all of the losses that happened very quickly yesterday after the Fed and then Jerome Powell ultimately speaking publicly, all of those losses have been erased back to the positive at the time that I'm recording this. And that's why when I was making a video talking about what was happening, the developments, yes, I find it interesting to follow all of that. But if you watch my videos where I was talking about, you probably got the fact that my attitude was just like, damn fools, bunch of idiots out there emotionally buying and selling. And that is pretty much how I feel. The people that cause the volatility, I half-jokingly call them useful idiots, because without them, we never have moves to the upside. In a world where there's nothing but a bunch of me's, Moon Family Sedans here, there is no volatility because I'm stubborn AF. You are not going to get me to budge emotionally when it comes to buying, selling, anything with investing. I'm just going to sit there and be stubborn, for better or worse. That's just it. So in a world where everyone behaves like me, there's no volatility. There's no point in investing even, effectively. But that's not how humans behave. They are useful with their irrational nonsense behavior. And so look, I'm here for it. Not to participate, but to observe it and kind of joke about it a little bit. Because that is what happened. So I'm appreciative of it, but damn, I'm glad I'm not behaving like that silly-ass nonsense. We've also got the market cap for the asset class a little shy of 1.2 trillion, and Bitcoin dominance at 45.52%. Crypto Fear and Greed Index at 57 out of 100. So market's still in greed. Now, that doesn't update for almost 2 hours at the time that I'm recording this. So given we had a positive day today, won't be surprised if when that does update, which does only once every 24 hours, wouldn't be surprised to see that pop a little bit higher. Then we've got this. Here's somebody named Jim Bianco, president of Bianco Research. And he shared this. I'm just going to make this full screen right here. And I've talked about this before, but this is updated even further now. This is the Fed's balance sheet dating back to September 2021. And Jim Bianco simply wrote, the Fed updated their balance sheet. Now 2/3 of quantitative tightening has been reversed. So think about this. Why has the Fed been increasing interest rates? And obviously, you know, the effect that had on the economy and what it had in terms of speculators and markets, you know, the effect that it had, you know, dampened things, obviously, which is the intended goal. If you want to, you know, quell inflation, then that's what you do. That was the intent. But then with the recent banking collapse, as you can see, so fine, they started increasing interest rates. And, you know, the Federal Reserve's balance sheet, it's going down, 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 down. Banks collapse, oh, it goes all the way back up. So look at how long it took him to get the balance sheet to go in that direction. And then the span of like a week-ish, it's just 2/3 of the quantitative tightening has been reversed. 2/3 of it. These people are not geniuses. They are not elite. They are not the Wizards of Smart. They're incompetent. They are dolts. But here they are running all the financial aspects of our lives. I'm telling you, they may use, you know, words that, you know, the typical person isn't accustomed to because the typical person doesn't have, you know, their career focused in finance. But I'm telling you, it's just a definitional thing. Learn the vocab they have and then learn. But then if you learn that and then you learn the concepts they have, you might quickly understand, even if you're just a person of regular intelligence, the ideas that they have are very stupid. STLLPID, stupid, but they're driving everything that's happening in equities markets and in crypto and so on and so forth. What an S-word show. And that's what we're looking at, and that's why we've been seeing what we've seen, and markets react to it. It's just complete absurdity, and I enjoy observing it. I'm happy to talk about it. It's fun to report on it on the Moon Family Sedan channel, but I gotta mock it a bit, because it really is dumb as hell. Which leads us to this. From the Daily Huddle, $359 million in Bitcoin and crypto liquidated in just 24 hours as Bitcoin reclaims $28,000. Hundreds of millions of dollars in Bitcoin and other cryptocurrencies were liquidated from the markets after the Federal Reserve raised interest rates. According to data from market intelligence firm CoinGlass, in the past 24 hours, $359 million in crypto was sold off. The liquidation was likely caused, no, I shouldn't say likely, the timing, sometimes timing in terms of moves for various cryptos, it's a question mark. Was there a delay for some reason? That is not the case here. It was instantaneous. I watched it live. But anyway, they write, the liquidation was likely caused by the Federal Reserve raising interest rates again, this time by 25 basis points on Wednesday, in the agency's effort to draw down inflation. When the rate hike was announced, Bitcoin's price momentarily dipped into the high $26,000 level. Bitcoin has since recovered and is trading for $28,646 at the time of writing. Now, actually, that's not quite precise enough. I watched the pricing live. Bitcoin actually temporarily spiked, and it went down in particular after Jerome Powell started speaking. I talked about that yesterday. Yeah, it went straight into the gutter, 26,000s, and now it's back up at this point. And all of these people that were panic selling at Bitcoin in the $26,000, what if it goes lower? What will I do? I don't know, wait. I don't know, wait. Like, that's what I do. I've been doing that for over half a decade. It's worked out pretty damn well. Not doing a damn thing, just sitting here holding stuff. Maybe there's that. And so it turns out in this case, you didn't even have to wait that long. Less than a day. And it's back to where the hell it was. Completely ridiculous. Now, in terms of what is going to drive this asset class further, well, there are a number of things to consider, but what about on the institutional side? I haven't talked about that too much lately, but with the chaos that's happening in, you know, the question of solvency of various banks and this and that, because there have been actual banking collapses recently, is this going to cause institutions, is it going to prompt them to, in any way, further jump into crypto just to diversify? Well, that's what this article is about. Check this out. ARK Invest CEO Cathie Wood says that the U.S. banking troubles will prompt institutions to invest in Bitcoin in order to diversify their portfolios. In a new interview with Bloomberg, Wood says Bitcoin's strong performance as U.S. banks failed will encourage wider adoption of the crypto asset. Quote, one of the things that happen in a crisis is liquidity dries up, so that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive, end quote. Yeah, and so, look, and that's all well and good. I just want to be clear, because I've talked about this, and I want to make sure my point is perfectly clear on this. I'm not disputing that. My point is that when the Fed makes decisions, which are frequently dumbass decisions, markets respond, ultimately on a global scale, because the United States is the printing factory for the United States dollar, which is the global reserve. So all of these impacts are highly consequential on a global scale. So what I'm noting is that the Fed is controlling the price of Bitcoin in the moments where it makes those moves. That doesn't mean that I think we won't see increased adoption of Bitcoin and crypto, including XRP, moving forward. That doesn't mean that at all. It doesn't mean that over this short time period, Bitcoin hasn't been doing well, but it's also been doing well for the vast majority of this year. So in terms of what is the narrative, I'm just saying that this narrative that Bitcoin is impervious to what the Fed does is bogus. If you want to note what has happened recently in terms of the disparity between equity markets and what happens with Bitcoin specifically, fine. Facts are facts. I don't have a problem with that. I'm just saying the narrative where like Bitcoin is impervious to the Fed, that's the part that I have a problem with. The rest of it, no, that's fine. Anyway, piece continues. Wood says she remains confident in ARK's base case prediction for Bitcoin's price, which is more than $680,000 by the year 2030. Quote, you'll find the building blocks of those Bitcoin price targets in our ARK Big Ideas 2023. And they are, for the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheets. So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example. End quote. And so it's not a wacky idea, and I certainly hope that this happens, because, look, I pointed this out before, but it's crypto historically has moved in tandem with equities, just in particular for the big moves. Now, on an individual level, which is just an anecdotal individual data point, on an individual level, this is one of the many reasons that I hold crypto in general. I want something that, the Fed can't print into oblivion, that they don't have that kind of control over. And in the case of XRP, it's extra attractive because it's deflationary. And that's going to be the biggest driver of price. In fact, I think it's fair to note, just be realistic, it's a minuscule driver of the price, but I still like that in general. I think it's an attractive concept. The point is, it's certainly not inflationary. So for me, that is a reason. I want something that's detached from all the rest of this nonsense, because I do not think that the people running all of this are just genius level people. I really don't think that they are, as demonstrated by their performance. So, could people at institutions, because understand businesses and institutions, they are people. That's what they are. Businesses are people. What do you think? What do you think a business is? The brick and mortar? I mean, come on. The business, it's the people. And so the people at the institutions, might some of them also be thinking that? Might some of them make moves that would, not threaten, their existence, but, just put in a certain percentage that, if understanding how crypto historically has performed, 14 years worth of data, the trend is to the upside, and it will dramatically, in all likelihood, outperform anything else you're invested in. Isn't that a reason to put even just a little dab in? And so there's this quote. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class, diversifying their portfolios. I believe it's somewhere between 2.5% and 6.5%, so not crazy. These are the sorts of allocations they would have made to emerging new categories of assets like real estate in the 70s, emerging markets, and small cap in the 80s and 90s. So I think in a general sense, it's just kind of a question in the short term. What are the institutions going to do now that we have this banking crisis? Is that actually going to expedite the process of them jumping in? Because I think no matter what, if you fast forward a decade from now, you'll see that there obviously would be, over that time period, a dramatic increase. But the question is, in the next 3, 6, 9, 12 months, is that going to be a catalyst for such? Maybe. Well, for some people, probably yes. It's just, is it going to be enough that it's noticeable, or is it just going to be individual instances, like, people like me? Like, I'm one data point. I'm one human, right? So I've treated crypto like that. Sure. Are there going to be enough, though, institutions? Now, if that does happen, if you're talking about just, those, it smells like small percentages, but the dollar impact would be dramatic. And there's a finite amount of Bitcoin, there's a finite amount of XRP, and the degree to which this would dramatically drive price, it's hard to overstate the degree to which this is consequential. So I continue to plan for that. And I bought more crypto. You know what I bought? Some of you might have guessed it already. I was talking about this a little bit recently. It was more Flare. Now, this is something that, if it takes off and demand increases in crypto in general, although I think that's a no-brainer over time, depending on how the project does, could make an absolute fortune, or I could just lose everything. So again, to be clear, I'm going to share with you my thought process on this, because I haven't talked about this on the channel ever before. But again, I'm going to say it one more time. I am not encouraging anyone to do this. I do think this is, what I've done is highly risky, and I acknowledge I could lose everything. I don't know what's going to happen. I just want broader exposure. And I put in, although a big amount to me, an amount that I'm willing to lose if it comes to it. And I fully expect that, or think it's possible. I mean, hold about 30 different cryptocurrencies. I may never cash out, so maybe it is the case. I'll make a fortune on a handful of them. And maybe the rest of them, I'm not able to cash out before they go to zero. Even if that might happen. I don't know. Or maybe I'm able to cash out on most of them. I don't know. We'll see what happens here. But I'm fully acknowledging this could be one where I ended up getting a goose egg out of it. But I want to talk about this because Flare, and a lot of people have a lot of different opinions, and I'm willing to be persuaded for sure. But, it's the case that initially Flare tokens, the initial distribution was supposed to be allocated completely to XRP holders, right? You had to, initially the deal was if you held your XRP, if you put a claim on it, back in December of 2020, or if you held an exchange that was going to take care of you, then you would be allocated your Flare. And it ended up coming to a point where they're like, okay, well, you're going to get it, but it's going to be over a span of initially 3 years, but it's still going all to XRP holders. And I wasn't the biggest fan of that because I'm like, okay, well, that's just going to be a lot of downward pressure sustained for 3 years. Now, the truth is, the downward price pressure, whether you have it all at once over a time period of 3 years, it's going to equate to the same downward force. It's just a question of how long do we have to put up with that and to what degree would it stress people out. But ultimately, if people don't want it, then they don't want it. So after that period's over, it won't matter anyway. But it's annoying to have to deal with that for 3 years. So I was kind of against that. I was like, just rip the Band-Aid off. And if the price, we'll enter price discovery when it launches. And if it goes way down from where it initially starts at, and we fast forward 24 hours and it's way, way down from that, then so be it. And then the whole ecosystem can start to recover and continue to participate in price discovery. That was my stance. But then things changed. And because look, I think if you had the situation where it really was XRP holders solely, as initially promised, receiving the XRP, I do think with each distribution for that 3 year period, I think with each of those 3 year periods, you'd be handing those Flare tokens to people who don't necessarily give a damn about it. And I think that you would, in that instance, see a lot of downward price pressure. But that's actually not what's happening right now. At least it doesn't look like it to me. What's happening now, because the Flare ecosystem, people voted on it, and the distribution model changed. Yes, XRP holders, they did get their initial distribution, but only 15% of it. That's what it started at. And there are no other airdrops unless you take action, meaning you have to take your Flare tokens, you have to wrap them, and you have to delegate them. And then you get, for 36 months in a row, you get a certain amount back. And it's actually pretty substantial, the amount that you get back. And so people are complaining about the tokenomics. They're saying that's just downward price pressure. And that's a fair point to bring up, for sure. In fact, I was talking about this on Twitter. My fellow XRP YouTuber, the Blockchain Backer, was saying that's just the tokenomics are terrible. And, the only way I see that for this to, kind of even out, I'm paraphrasing here, but he said the only way I basically see for it to even out is if the price goes way down, maybe like 90%. And maybe he's right. Maybe that does happen. I don't think he's saying wacky stuff at all, and I value his opinion. But I'm looking at this a little bit different to this point. If you had, again, the distributions going to XRP holders because they had that snapshot in December 2020, it doesn't matter necessarily that all those XRP holders give a damn about the future of the Flare ecosystem. But if instead the only way to get the rest of the distribution is you have your flare and you don't sell it, and then you wrap it and delegate it, and then you get more, those would be the people that would be least likely to sell it. Not most likely. If we were going to XRP holders, I'd be like, yeah, I'd be a little bit more worried about that. But no. So, but even if this happened, I ran some numbers, and even if the price of the Flare token, which is currently about 3.1 cents as I'm time recording this, even if it went down 90%, based on the amount of Flare tokens that I'm anticipating to receive over the next 3 years, roughly, for the rest of that distribution, because I'm just going to hold it, mind you. I'm just going to hold. I currently have no intent to sell unless some crazy price action stuff happens, then we'll talk about it. But say I hold it through that period, even if the price goes down 90%, based on what I'm anticipating to get over that 3-year period, I'll be at about break even if the price goes down 90%. 90%. So consider this, because there's more things that went through my little Moon Family sedan brain when I was considering making the purchase that I made. And I'm not going to tell you how much I purchased, but let me just use a number that I think for most people would be reasonably big. Let's say you had 250,000 Flare tokens. Just to start. Now at 3 cents, just to use easy numbers, let's say it's 3 cents, that's worth $7,500. 250,000 Flare at 3 cents, $7,500. Okay. Well, there's a Flare distribution simulation model, which the community made me aware of, because I was trying to sloppily figure out, some of you may have saw it on Twitter, I was trying to sloppily figure out in an Excel spreadsheet, what's my distribution going to look like? And it was a good faith effort, but I did have a problem with my model in which I assumed a percentage of distribution that it turns out isn't the most reasonable, because it actually diminishes over time. So I started with something that now actually would be conservative at 13% distribution per month, because there are people for the first distribution that got 20% of their holdings. But it turns out by the end of that, it skews downward to the point where maybe more like 4%. But anyway, it doesn't matter. So even with this, looking at because there is a distribution simulator out there, and I just plugged in that number of 250,000. Well, by the end of that, at the end of that, roughly 3-year period, you wouldn't have 250,000 Flare anymore. You'd have 3.1 million Flare, which at a price of 3 cents, that's assuming the price wouldn't move. Of course it would, up or down, we'll see. But at a price of 3 cents, that's a little shy of $100,000. Now, mind you, that's because you have more Flare. The price in this hypothetical that I'm discussing here didn't move. So is the price going to go down, or is the price going to go up? Well, I don't pretend to know for sure. But again, I've already articulated my point that I think that the people that are here now, like me, they're not intending to sell. And you have to have Flare to get the distribution anyway. So the people that are already in it are not the most people that are likely to sell. It's not like it's being airdropped to XRP holders, which was originally intended, in which case, yeah, I think a lot of them would sell. It's people like me who are like, I'm just going to stick around. I want the exposure. Let's see if Flare does well. And I don't know if it will. The coin's been around a couple months, right? So, I get it. Price could go down, but what happened leading up to the first Flare drop on, I think it was the 17th. So, because there's the first airdrop in January, but then there's the first of 36 distributions. Those are called Flare drops. Well, leading up to the first one, there was a price crash to its lowest point 2 days before the Flare drop, where it got down to 2.4 cents. 2.4 cents. But that was before the Flare drop. So it's not that people got more Flare and started selling. No. It was in anticipation of people selling that certain people started selling, thinking that people would sell, but in the future. So kind of self-fulfilling prophecy, right? And what happened? The price recovered very quickly. And then when the first Flare drop happened, I believe, again, it was on the 17th this month of March. When that happened, the price did not crater one bit. Not a little. It's been chugging. In fact, it's up a hair since then, not much. So that's we have one data point. Now, a data point does not indicate a trend because it's one instance. You need multiple data points to have a trend. But with this one data point, that's kind of compelling information, because that would have been my suspicion based on the fact that, again, the people that are here are the ones that are not most inclined to sell. So now, how confident I am that we're not going to see price crater as a result of the Flare drops, I am not highly confident. Is that what I think is more probable? Yes. Okay, so my answer is yes, I think that's what's probable. I place my bet. Am I highly confident that my supposition is correct? No, I'm not. I think that there's a lot of room for error here. There could be things I haven't considered. and the price could just absolutely plummet beneath me with future flare drops. And I acknowledge that could happen. But I decided, I made a move here. I decided I want the exposure because if looking at what, even if he had like the number I'm just making up, I'm not telling you what I bought, I'm just using a number that's relatively big for most people, 250,000. If you're talking about that being worth more in the future, well, God, what if it goes to 6 cents or 9 cents or 12 cents? And so consider this now. If you hold the point that flare is going to drop because of these flare drops, people are just going to be selling because the tokenomics are awful. Kind of like the blockchain backers get it, which is not a crazy point. But if you believe that that's going to happen, then let me ask you this. Is the inverse true when we get to the end of the flare drop? Once there are no more distributions after that 36-month period, doesn't the opposite happen because there are no more drops? Now people recognize there are no more drops and they start putting money back into it. Isn't it only reasonable to suppose the inverse is true when the tokenomics are no longer what you would perceive as terrible if that's your position? And not only that, when it comes to demand for crypto, is demand for crypto static just in a general sense, or does it increase over time? So even if there was downward pressure from these flare drops, wouldn't you also, over the next few years, think that there would be likely that more people would come into the crypto space in general and some would jump into flare, mitigating some of the downward price action? And on top of that, once we get to the end, like even setting the flare drops aside, once you get to the end and there's no more downward price pressure and the average inflation rate is probably more like 5% or something like that, which is pretty close to what's been happening with XRP if you consider what Ripple's been putting into what's considered the circulating supply, would be pretty equivalent, probably anyway. Well, if that's the case, what do you think happens when, because mind you, there's like 4% of humans have ever held Bitcoin, way less than 1% of humans have ever held XRP, and way fewer than that have ever held Flare. What happens when you have like 10% of humans in crypto or 20% of humans in crypto? The multiplier effect for the smaller cap coins, obviously it's completely more outrageous. So, you see what I'm getting at here, right? If demand is going to increase, which is absolutely a gigantic part of, my investment thesis when it comes to crypto in general, wouldn't that hit this as well? Well, my bet is yes. Now, that said, there are a lot of moving parts to this. This is a small cap coin. It's a minuscule market cap. And, $380 million market. It's pretty small. It's pretty small, all things considered. Also early days. It's been out a couple months. And it's so much more risky to hold a new coin like this on top. So there's so many uncertainties, which is why I said this might be the riskiest crypto move I've ever made. But I was just like, I'm just doing it. I'm just doing it. I still got my XRP. I got my everything else. I got my HBAR. I got my Algo. I've got all the other stuff, close to 30 coins. I'm fine. If this one goes to zero, fine. I messed up. I made a little oops-a-doodles. I still think I'm going to have a net plus with my crypto experience. So I'm not worried in that regard. But, you look at this little market cap, 380 million. My God. There's so much opportunity there, but again, the risks. Yes, there could be a bug in the code and we discover that and then it goes to zero. Or what if we're actually tricked and it's actually a rug pull? What if that happens? That happens in crypto. Now, I don't think that's probable here, but it's a risk. And then what about utility? So utility doesn't sufficiently matter in 2023, but what about a world where it does sufficiently matter? What happens then? Is this going to be a blockchain that is adopted in any important way that would result in it continuing to exist and people putting money into it? I don't know. But that's why I said I want exposure. I just think from what I've seen from this point, the technology seems to work. The incentive structure seems to be there. And even if it doesn't have long-term viability decades from now, is it going to make it through another market cycle a few years from now? Well, that seems more probable at least. So we'll see what happens. But yeah, so this is, again, I just want to flesh out my ideas on why I've done what I've done here. And some people will agree, some people will disagree. I'm just sharing with you my open, honest thoughts on this. So again, not telling anyone to do this because this could go horrifically for me, but I just think it's an interesting topic and there's so many, heated opinions on this. I just thought I'd kind of share what my thoughts are because I haven't really fully fleshed them out ever in any of this. But to all the people, again, one of the most important points that, the people that say all the tokenomics are awful and the downward price pressure. Well, the first data point says that you're wrong on that. But again, I admit that doesn't make a trend. So maybe the next one happens and okay. But, after a few data points, you need at least 3 to have a trend. If we start to see that, I'm like, okay. So we'll see. I don't know. There are so many unknowns. I don't know. I'm just saying, if it does go to zero, I'm going to be okay. But if you're talking about, like in my hypothetical, where you're talking about for 3, you're doing nothing, you have to start with 250,000 flare tokens, and then by the time the final flare drop happens 3 years later, you go from 250,000 to 3.1 million. What if it's worth 6 cents or 9 cents or 12 cents or 15 cents or 20 cents, or even what XRP is worth today at around 44 cents? I don't know if that's going to happen, but I am saying that the flare drops are going to cease at some point. I'm just trying to get mine in the meantime, and I'm just going to ride it out and we'll see what happens. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.